Yeah.
Okay, fellow finance enthusiasts, let's dive into the world of an RFO that's a responsible financial officer for your local council. Imagine this. You're juggling budgets, audits, and a whole bunch of acronyms. Feels a bit like juggling chainsaws while riding a unicycle, right?
Oh, it does. Yeah.
But what if I told you there's a roadmap, a sort of financial GPS designed specifically for RFOs?
Ooh, that sounds helpful.
That's where our deep dive today comes in. We're dissecting the diary of an RFO,
Hmm.
which breaks down the entire financial year into manageable chunks.
And trust me, having that roadmap makes all the difference. Being an RFO is about so much more than just crunching numbers. It's about proactive planning, staying organized, and ensuring every penny spent aligns with the council's goals.
It's like it. It's like being the financial guardian of your community. And speaking of guardians, did you know there's this thing called the AGR? The Annual Governance and Accountability Return, with a deadline that could make even the calmest RFO break a sweat.
Oh, absolutely.
Mhm.
Missing the June 30th AGR deadline is not an option for larger councils. We're talking potential legal ramifications, reputational damage. It's a big deal.
Okay, that sounds intense. But don't worry, our deep dive today is all about breaking down the year quarter by quarter so you can stay ahead of those deadlines and feel confident in your role.
Exactly. Think of this as your quarterly financial fitness plan.
Yep.
We'll guide you through each stage, highlighting the essential tasks and potential pitfalls.
Oh, love that. So let's lace up those financial running shoes and tackle Q1, that's April to June. For many, it's springtime, but for an RFO, it's all about year-end wrap-up and, of course, that looming AGR deadline.
You've hit the nail on the head. Q1 is a sprint. For larger councils, those with an income or expenditure over £25,000, this means submitting their full AGR, complete with bank reconciliations, explanations for any variances, the whole 9 yards. And they need to get it to their external auditors by June 30th.
So it's all hands on deck for our larger councils. What about our smaller councils? Do they get a bit of a breather during Q1?
They do get a slight reprieve. If their income and expenditure are under £25,000, they notify their external auditors that they're exempt from a full audit. But they still have responsibilities. By July 1st, they need to publish specific financial documents on their website.
Transparency is key. Now, alongside the AGR frenzy, the diary of an RFO also highlights the importance of reviewing internal controls, especially in Q1. It sounds a bit like getting your financial house in order.
That's a great way to put it. Think of internal controls as the checks and balances that keep your council's finances running smoothly. This is where you review financial regulations, ensure payments are authorized correctly, reconcile those bank statements, manage your assets basically, make sure everything is accounted for and aligned with proper procedures.
So it's about being proactive, spotting any potential issues before they become major headaches.
Precisely. And Q1 is the perfect time for this financial health checkup, especially after the whirlwind of the previous financial year.
It's like a financial spring cleaning. Now, before we move on to the calmer waters of Q2, are there any other essential tasks an RFO should prioritize during those first few months of the financial year?
Two things come to mind. First, it's crucial to review the council's financial policies, think reserves, investments, procurement. These need to be up to date and crucially followed. Second, don't underestimate the importance of a good risk assessment.
Risk assessment. So we're talking about identifying potential financial pitfalls.
Exactly. It's about thinking proactively. Could there be any issues with fraud, cash flow, payroll? By identifying those risks early on, you can implement strategies to mitigate them, saving yourself a lot of trouble down the line.
We've talked about internal controls and risk assessments, but there's another crucial aspect of Q1 we can't overlook. It's still about transparency and giving the public a voice. I'm talking about exercising public rights.
That's right, and it happens right as Q1 transitions into Q2.
Uh,
During the first 10 working days of July, the council opens its books, so to speak,
yeah.
giving residents a chance to engage with the financial decisions that affect their community.
So it's about holding the council accountable and making sure everyone is on the same page.
Exactly. The public can inspect accounts, ask questions about the AGR. It's all about transparency and good governance. And speaking of the AGR, our larger councils, the ones that submitted their documents by June 30th, should have their external audit wrapped up by September.
Which means that September council meeting becomes a pretty big deal, right?
Yes, absolutely. That's when the council, with input from the RFO, reviews the external auditor's feedback and formally approves the completion of the audit. It's a significant step signifying that the council's finances have been given a clean bill of health.
But I have a feeling that even with the external audit wrapped up, our RFO isn't exactly relaxing by the pool during those summer months. Right. There's something else on the horizon, isn't there? Something about precepts.
You know it. Q2 is all about laying the groundwork for the next financial year, and that means diving headfirst into precept planning.
Okay, precepts. It's a term that often causes a bit of head scratching. Could you give our listeners a quick refresher on what it actually means for their council and ultimately their wallets?
Think of the precept as the council's portion of your council tax bill. It's the money the council raises from residents to fund all those essential local services, maintaining parks, keeping the streets lit, supporting community initiatives.
So when I see precept on my council tax bill, that money is going directly to my local council to fund those services.
Exactly. It's a vital source of funding for councils, and Q2 is where the strategic planning for that funding begins.
And the diary of an RFO really emphasizes the importance of early preparation, doesn't it? Why is that so crucial?
Rushing the precept process is a recipe for stress and potential inaccuracies. Starting early in Q2 allows for thoughtful budget discussions, a thorough assessment of the council's financial needs, and ultimately a more accurate and well-informed precept request.
So whether it's renovating a playground, investing in new equipment, or simply maintaining existing services, those discussions should be starting now, right?
Absolutely. And it's not just about identifying new projects. It's about analyzing current spending, anticipating any potential increases in operating costs. It's a comprehensive look at the council's financial landscape.
It's about striking that balance, meeting the community's needs, while also ensuring financial sustainability.
Yeah.
And while those budget discussions are happening, there's another key aspect of Q2 to keep in mind, capital expenditure.
Yeah.
Those big-ticket items, right?
Exactly. We're talking about major projects that require significant investment, building a new community center, upgrading council facilities if those are on the horizon. Q2 is the time to really delve into the financials.
Yeah. And speaking of financials, our source mentions something called the CIPFA Prudential Code. What's that all about?
CIPFA stands for the Chartered Institute of Public Finance and Accountancy. They set the standards for financial management in the public sector. Their Prudential Code is essential reading for any council considering borrowing for capital projects. It provides a framework for assessing affordability and ensuring that any borrowing is sustainable in the long term.
So no borrowing recklessly, no matter how exciting that new community center might be.
Exactly. It's about responsible financial stewardship. And that's a great way to sum up Q2 as a whole. It's about strategic planning, making well-informed decisions, and laying the groundwork for a successful financial year ahead.
With those precept plans in motion and capital expenditure carefully considered, we move into the autumn months and Q3, that October to December period. What's on the agenda as the leaves begin to fall?
Think of Q3 as a financial health check, a time to fine-tune those budget plans, monitor spending, and make any necessary adjustments before the year-end rush.
So we're in the final stretch now, Q3, October to December. It's like the calm before the storm, right? A chance to make sure everything is aligned before the year-end push.
You could say that.
Yeah.
While it might be tempting to coast a bit as the holidays approach, Q3 is all about fine-tuning those budget plans we carefully crafted in Q2.
So those initial precept discussions are now transforming into concrete proposals. Exactly. By October, the council needs a crystal clear picture of its financial needs for the coming year. This is when the budget is finalized and that all-important precept request is prepared for submission.
And that precept request has a deadline we need to keep in mind. It's not just a gentle suggestion, is it?
Not at all. While councils are encouraged to submit their precept request to the principal authority by the end of January, the final non-negotiable deadline is March 1st.
Okay, so there's a bit of wiggle room, but it's definitely best to avoid those last-minute scrambles.
Absolutely. And there's a crucial piece of information councils need from the principal authority before finalizing that precept request, the updated Band D council tax base figure.
Ah, yes, the Band D council tax base figure.
Like
The Band D council's tax base figure. It sounds a bit like something you'd find in a cryptic crossword puzzle. Could you demystify it for us? You have a jigsaw puzzle representing all the properties in your council's area.
Each piece of the puzzle is a property. The Band D council tax base figure tells you how many of those puzzle pieces are equivalent to a Band D property in terms of their value. It's essentially a way of standardizing the tax base.
So it's about understanding the overall value of properties in the council's area, which then helps determine how much to request in the precept?
Precisely. That figure has a direct impact on how much council tax each household pays. Without it, the council can't accurately calculate its precept request and ensure they have the resources to fund those essential services we've been talking about.
It's like a financial ecosystem.
Yeah.
Everything interconnected. Now, besides finalizing the Precept request, Q3 is also a time for those essential mid-year checks, right?
Yeah.
It's like a financial checkup to make sure everything is on track.
Exactly. We're talking about revisiting the AGR, analyzing financial performance, and making sure the council is on target to meet its goals. This is the time to address any unexpected expenses or variances from the budget, giving you ample time to make adjustments before the year end.
So it's much easier to course correct mid-year than to try and play catch-up when the financial year is coming to a close.
Absolutely. And while you're reviewing those financials, don't forget about your contracts.
Yeah.
Q3 is a good time for a mid-year contract check.
Right, because contracts are the backbone of many council operations.
Yeah.
What should an RFO be focusing on during this mid-year check?
First and foremost, are payments up to date? Are there any upcoming renewals to be aware of? Are there any potential issues or points of contention that need addressing? This proactive approach to contract management can save you a lot of headaches down the line. And if a contract is up for renewal, that might trigger another round of procurement to make sure the council is getting the best possible value for money.
Exactly. It's all about due diligence and financial responsibility. And for those larger town councils or even some smaller parish councils wanting an extra layer of scrutiny, Q3 might also be a good time for an interim internal audit.
An interim audit. So an additional check before the full year-end audit in Q4.
Precisely. It's a chance to address any minor issues or fine-tune those internal controls we talked about earlier. Think of it as a way to ensure a smoother year-end audit experience.
I like the sound of that. So as the festive season approaches and we head into Q4, January to March, our RFO is diligently working behind the scenes ensuring the council's finances are in tip-top shape.
Exactly. Q4 is about bringing everything together, tying up those loose ends, and ensuring a seamless transition into the new financial year.
And with all the groundwork laid in the previous quarters, Q4 should feel less like a mad dash and more like a well-deserved victory lap.
That's the goal. Of course, Q4 comes with its own set of tasks and considerations, but with careful planning and attention to detail, our RFO can face the new financial year with confidence.
Speaking of Q4 and those year-end procedures, that's where our deep dive into the life of an RFO comes to a close. We'll be back next time to explore other fascinating aspects of an RFO's role.
Until then, best of luck navigating those financial waters.
And remember, every penny counts.